Good morning.
Good morning. How are you?
I'm good. How are you?
I'm good. I'm good. Good to see you.
We just got through Thanksgiving and get ready to go into Christmas time. Are you ready for that?
I'm ready to relax and eat and hang out with family. Absolutely. Good
Same, same.
deal.
We're going to talk a little bit about investing today because this time of year, the days of market are longer and the prices are going down pretty steady right now. So it is a good time for investors. I always think any time of year is a good time for real estate. There really isn't a bad time to invest in real estate. And so I'm here with Tommy. Tommy, can you introduce yourself and share your experience working with real estate investors?
Absolutely. I'm Tommy Patterson. I'm a local lender here in Savannah, Georgia. I've been in the business for 19 years. And yeah, I've worked with several investors throughout my career. And like she said, I think it's definitely a great investment. Real estate in general is a great investment, whether it's primary, second homes, or investment properties.
And what loan options do investors look at first?
It really just depends on whether or not they're trying to purchase the property to fix and flip it, to rent it out, or to fix it and then rent it out. It really just kind of depends on what they're looking to do, and we will base that on what kind of loan program to pair them up with.
And what are the typical down payment requirements for investment properties?
On average, it's about 20%. You can get by with as low as 15%.
Mm.
And, for some of your fix and flips, it's usually 25 to 30%, depending on the situation and how much experience you have and all that good stuff.
How do investment loan rates, how do the rates differ from primary home loans?
Well, obviously, investment loans, they're a little bit higher risk than a primary residence. So the rates are going to be a little bit higher. Usually, I would say, depending on the type of investment loan, I would say anywhere from 1 to 2% higher. In some cases, maybe a little bit higher than that. But yeah, the interest rates are definitely higher for investment properties or investment loans.
And so what do you look for when you're qualifying someone for investment property?
Well, I'm the first thing I want to do is see what they're looking to do, whether or not that's fix and flipping, fixing it up, rehabbing it, and then selling it, or rehabbing it and then renting it out. And then, of course, I need to know, what the credit score is, how much money they have to work with, to put down, and those types of things.
And does owning multiple properties impact approval?
Not really. It can, depending on which kind of loan program you're trying to get. Obviously, you know, there's a no document investment property type loan. There is an income investment type loan. Obviously, if you can prove income on paper, you're going to get a little bit of interest, a little bit better interest rate. Whereas, if we have an option of, no document, no income loan, so that interest rate is going to be a little bit higher. But as far as multiple properties, it really has no effect at all, or little to minimal impact, not no impact at all.
So kind of touching with that, the DSCR loans are popular. Can you explain exactly what that is and how it works?
Yeah. The DSCR loans are debt service coverage ratio loans, and an example of one is basically um, if a particular house cash flows as far as current market rent value, meaning if the rent is $2,000, or the market rent is $2,000, and your mortgage for that property is, let's just say, 1,800, then basically that rent covers the mortgage. So therefore, you don't have to prove any income. If you do have to have, 700 credit score, you have to have 20% down, usually 3 to 6 months in reserves. But basically, as long as the rent covers the mortgage payment, then, it kind of cash flows and kind of cancels out everything. And you should be approved for the loan as long as, you have the assets to cover the down payment and the reserves and that kind of thing. So.
How do loan options differ for flips versus like you're keeping the house and renting it out?
Usually your flips, obviously they have a little bit shorter term because they expect you to, sell the property within, 6 months to a year. Whereas, a lot of times it's an interest only type loan. Whereas your buy and hold is, it's usually a fixed rate. And the interest rate is a little bit better. So those are the those are the main differences.
But my experience from flipping, you're not really worried about that rate too much because you're going to sell it, and so you're not going to be paying a long time on that interest.
Right,
So
right.
that kind of offsets that. Um,
Right, absolutely. Yeah, it's usually interest only too, so it makes your payment kind of cheaper, you know.
what should investors know about financing a multi-family property?
I think it's a great idea. Whether it's a single family or a multifamily, I think multifamily is a little bit better investment because you have more opportunities to, rent out the property, to different individuals. So I think it's a great investment. It seems like they're harder to come by these days, and maybe everybody has caught on that, the multifamily properties is a great investment. But yeah, I think it's a great investment.
Yeah, I think so too, especially if you have a college student starting out their first home and they got some buddies that, I mean, they're going to be paying rent anyway. Why shouldn't they just pay for that mortgage?
Absolutely, well, absolutely, I agree with that's a great investment, for a college student or even if a college student um, is working and going to college, there's down payment assistance options for, a college student. And then there's also, you can get your down payment taken care of. You can get your mortgage payment taken care of if you're renting it out to, some other college buddies or whatever. So yeah, that's definitely a great option for a college student, purchasing a multifamily unit for sure.
So that looks kind of different if you're actually living in the on the
Yeah,
property.
yeah, because then it would be considered a primary residence. So
Mm.
therefore, you get the benefit of a lower rate, lower down payment. Um, we can go down as little as 3.5% for the down payment if it's a primary for a multi-unit. Whereas, if it's an investment, it's going to be at least a minimum of 15 to 20%.
And how does lending work for short-term rentals like Airbnbs and Verbos?
Um, Basically the same. The investor might look at the location of it and see the potential, but from my experience, I've never really had an investor question that kind of thing. Whether or not it's going to be, a long-term rental or a short-term rental. But so basically, it's basically the same. It works the same with the investors.
Are there any new guidelines that have changed recently that investors need to know about?
Not that I'm aware of. I have not heard of anything coming out recently, as far as, investors or any kind of lending trends or anything like that. It's basically, a minimum of 15%, depending on what you're trying to do as an investor with that property. So yeah, I haven't seen anything new.
Yeah, it's been a wild few years in real estate, and people are just like, I don't know. But
Right.
like I said, it's always a good time to buy, always. Yeah, and you're going to be paying rent or something anyway, so may as well make some money on it.
Exactly. Absolutely.
What is one big piece of advice that you would give to new investors?
I would just say invest as soon as you can. Real estate has appreciated overall for, years and years and years. And, it's a key to generational wealth.
Mhm.
It's definitely a great investment. In my opinion, I don't think you can lose. The home is definitely going to appreciate from year to year. So it's definitely a great investment.
Yeah, to me, it's as good as cash, in my opinion.
Absolutely.
Yeah,
Absolutely. You might not reap the benefits of it short term, but long term, you definitely will.
definitely. Yes. So what is the best way to contact you to get started?
The best way to contact me is, again, my name is Tommy Patterson. I'm also known as the Bald Mortgage Guy. I'm on Facebook, TikTok, Instagram, or you can give me a call or a text, 770-654-8599.
And if you guys want to join live or if you have any questions, make sure that you reach out to us so that we can answer those and be glad to have you on and let you pick our brains. And thank you, Tommy, so much. Again, you're always giving great advice and keeping us up to date because it does change.
Uh,
Yeah, you just got to keep up with it. And
in this business, things constantly change. Rates go up and down every day. People don't understand that. They go up and down 2, 3 times a day, as a matter of fact. So that changes and guidelines change. But at the end of the day, I like what I do, and I love helping people purchase homes and build generational wealth. And I think it's a big piece in generational wealth is real estate. So um, I like it.
and that's why we keep turning to you for all those good answers. You help keep us straight.
I appreciate that.
Mm.
My
Thanks
pleasure.
again. We'll see you in a couple of weeks.
Okay.
Yeah,
All right.
just so we can keep up with it, right? Who
Uh,
knows what's going to happen in 2 weeks?
yeah, no kidding. No kidding.
All right. Well, you enjoy the rest of your day. And everybody, thank you so much for watching. Tommy Patterson from Nexa Lending.
All right. Thank you, ma'am.
Bye.